We believe at Blanke, Schein Wealth Management that information is power. Our goal is to provide our clients, friends, and family with real-time and relevant market-related information. Our process creates smart and purposeful financial decisions that improve your life, your family, and the community you care so much about. Hello and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is June 24th, 2020, and we're going to get into our daily updates. We thank you for listening. This is an audio-only version today. Today's first topic, watching gold. As stocks take a breather, both on NASDAQ, S&P, and the Dow Jones Industrial Average, it's not uncommon for them to pull back, especially after the run that we've seen most recently. At the same time, gold is on the cusp of challenging that hard-to-crack 1,800 level per ounce, if you will. And that's due to fears of the second wave that's creeping up in the United States and Latin America as well. So gold is seen as a safe haven asset. So it's not uncommon that investors rush into gold, but there's a critical ceiling that it's going to challenge. It's this 1,800 an ounce mark. And so we're going to find out if the fear of the second wave persists. You want to really watch the gold market, because that's really going to tell us whether it's headlines or if it's breaking out, and it's going to be more than just the headlines. I'm not saying that they're not real cases. There are real cases, but the market actually looks into sort of fear indicators. And you want to watch the volatility index, the VIX. So we see volatility rising, as well as gold. Those are two barometers on our dashboard when we manage portfolios that we keep an eye on. And it really tells us, it's a litmus test for managing portfolios on a go-forward basis of whether the headlines and the medical information that we have is it going to persist and get worse, or if it's a short-term phenomenon. So it'll be interesting to watch the 1,800 an ounce mark for gold. If gold breaks that, it could obviously set new highs from that point forward, but it's going to be pretty tough to do. So we'll see how this plays out. Our next topic, the S&P is on track for a best quarter in history. Yeah, you heard me right, in history. We've got a ways to go before that even happens, but the surge that we've seen for the S&P 500, keep in mind, we don't have any earnings. We don't have any forward guidance. We don't even have the United States fully open. We don't even know if we can reopen fully. And there are other states like New Jersey, Connecticut, and New York basically quarantining travelers, as well as Europe quarantining travelers from the US. And all of this world's in flux, and you get the S&P 500 posting one of its greatest quarters in modern history, especially in trading history. Again, it remains to be seen how we finish, but the strength that we've seen from the markets is pretty it's amazing to see this resiliency, especially again when we don't have earnings. So that's going to sort of creep back up into, we believe, in the next 3-4 weeks, if you will, as we get closer to earnings season and we sort of round out this quarter. But we just saw NASDAQ report, a huge winning streak as well as all-time highs. So there's a definite disconnect that we're seeing from what we, on a day-to-day basis, with the coronavirus headlines are giving us and sort of the news around the world. But economically speaking, I think the market is really telling us that there's not going to be a second shutdown regardless of a rise in these cases. And that's good from a GDP standpoint, gross domestic product. And that's sort of why the market is looking at this. But markets take a step back, a breather right now from today's trading day. But long-term view, the market sees so much stimulus from the $7 trillion from fiscal and monetary policy, another round stimulus coming, as well as additional unemployment insurance coverage. So that's what the market's seeing through. So this coronavirus second wave headlines, but it's taking a break right now. Just a final topic of the day, another tax filing extension with a big question mark. So this is in the news outlets in the last 24 hours that Steve Mnuchin, Treasury Secretary, said it wouldn't be out of the question to take the July 15th extension that's already been extended from April 15th and kicking it maybe to November, who knows, even to next year. It will provide additional relief. You're going to see this continue to persist in the headlines because it could be an option going forward, because the IRS is having a difficult time even getting their tax people back to the offices. So it's not about us going to see our CPAs and getting our stuff done, which that is an issue as well. it's also the offices of the federal government and the IRS. So they're trying to get their workers back, but they're trying to do it the most responsible way, and they really can't process all of this in time. So I think that conversation is going to come to the forefront. It'll be interesting to see if we kick it down the road again, our tax 2019 filing, and if that deadline, July 15th right now is the deadline, if that gets pushed even further into the future. So it's going to be a headline. I think if you see a resurgence of the second wave, that's going to be more of a reality, but it's something to keep in mind and stay on top of that particular news topic of the day. So that's it. That's all I have for us today, and thank you for listening. And if you want to like and subscribe or show us a friend and family, we really appreciate that. Take care. Have a great day.